Shankar, I mean, this fall below 16,000, it would be academic from a point of view and psychological as well, because we've pretty much hit new lows for 2012. But what is your sense of how things are shaping up right now?
The global macro situation has been terrible, and obviously, we can't remain immune to that. But, at least look at the silver lining, and which is that oil has sold off very sharply, as well as gold. So, both those combined do have a pretty, strong impact on our current account balances, as well as on obviously the future of the rupee. And oil prices falling also really elevates the problem on the fiscal deficit, because the subsidy burden also comes down. So, I'm looking at the positives of this, that once the global macro settles down, I think India is looking very, very good, because
when do you expect that to happen, Shankar? Because the uncertainty on the global front has lasted for quite some time, and the news pieces that you gather are quite volatile. 1 month, the data seems good, encouraging, stable. The other month, you are again raising question marks there.
Well, if you go back from 2008, we've had periods in which in a month or two, global macros look terrible, and then they've kind of pulled back and been stable for 3 or 4 months, and again they go through this whole turmoil period. I think we are in that 1 or 2 month period. It obviously will settle down, whether it is a Greek exit or whatever, but I think the markets have largely discounted those fears. So, situation is not good, let's be clear about it, but within that context, it's not as if they will remain bad for, every single trading day of the year. So I suspect in the next few weeks' time, you will see some stability return, even at a lower level of the market. And at that point, people will start to see that India has really benefited out of this, because the rupee is really sold off, sort of oil is sold off, gold is sold off. Both those effects on the rupee and the current account, are not inconsiderable.
So the question mark really is, for how long does this pain last, and how much can it take us down to? Because the problem, as most people have been saying, it's not about there being some exaggerated selling, as opposed to there not being any kind of buying that is coming into the picture right now. And with the rupee doing what it is doing, it probably only worsens the scenario. You think the pain, aside of the time period, in just the quantum of flows, you think it can take us down further, well beyond the December lows that we saw?
Well, hard to say all those things. My simple point is that, it's not as if India has been underperforming dramatically the rest of the world. In fact, along with, if you see broadly, it's been in line with global equity indices. Against emerging markets, it's been reasonably resilient, save for the last couple of weeks when it has underperformed. But by and large, it has come out still okay. It's not an isolated thing to just look at India and say that things are bad here. Things are bad everywhere. Within that context, in my view, India stands out head and shoulders amongst the BRIC pack. I don't know, some silly folks are out there talking about that the I in the BRIC pack should become Indonesia and not India. And, the lack of governance in India and corruption in India. I can't believe that, people who have finished college degrees are talking such stupid things. It's not as if Indonesia is covered in glory in terms of governance and, lack of corruption. Or for that matter, Brazil, Russia and China. We all know how corrupt regimes there are, how corrupt corporate practices there are. India is streets ahead of them in terms of governance. So I don't know why this whole alarmist view has emerged, particularly from investment banks like Goldman and Morgan Stanley. I suspect the reason for that is because they don't get paid much in their divestments in India, so it's very easy for them to criticize India. While China, will give them 5% points on a agricultural bank of China IPO. So, that's okay. They know which side the bread is buttered.
You have the local macro risk, and then you have the global risk. While there is opinion building that the local macro risk may have been priced into the Indian market, there's still a question mark of how much global uncertainty has been reacted to already. How do you separate the two?
Our view from the beginning of the year, in fact from late last year, has been that 2012 will be a good year from India, relatively speaking, because our view has been very negative on commodities from the beginning of this year, including oil. So far, the trade seems to be playing out. All that is on the other end of the seesaw of commodities is India. So commodities do badly. India, by and large, barring the few handful of commodity stocks in India. The rest of India actually benefits vastly. So, if we just peer through the current sort of miasma of gloom, I think by the end of the year, India is going to be looking the best of the entire emerging market pack. particularly the brick pack, because all the other three are, two are producers of commodities and one is a huge consumer of commodity, and neither of them will benefit from a commodity meltdown. China's slowdown obviously hits commodities. Slowdown in China in itself is also sort of good news on a relative basis for India, because again, people in general have been moderately bullish on China and very bearish on India. Once that opinion changes, then again, you will see money flows come back to India. Government has not helped matters by, doing things like the Vodafone thing and the GAR thing. And that I think is a real tragedy in this whole story. It's not about, the sort of the problem of the global macro. I think India very well had these two issues not been there. But that being there, how unfortunate they are. GAR has been postponed by a year, but it's still out there in the woodwork. So that apart, I think by the end of the year, people will realize that this was the year in which India really shaped up to be a pretty good trade relative to the rest of the pack. And I do believe that the rupees hit a bottom. I don't think it depreciates anything more than 54.5 or so. And I think it'll pull back very, very sharply over the course of the next 2 or 3 months' time.
Is the prognosis that it's a good time to probably start medium to long-term portfolio building? And do you buy distress? Because even when the markets are down and doing what they're doing, there are still pockets of outperformance. What do you add on to, assuming that you are looking at the long term? Shankar?
Oh, you're asking me? Okay, sorry.
Yes,
I thought you were asking Adrian. Okay. No, I think it's a good time to be nibbling back into the markets, because I think your net for the year in dollar terms, I think you'll be probably flat now. I haven't seen the data on that, but I assume that would be about that. But then, on the other hand, the macro factors are looking a lot better now than they were looking, 5 months back. Oil was still 105 on the NYMEX and 120, 125 on Brent, and that's like off 10-15%. So inflation outlook, in my view, looks far more benign than it did 5 months back. The interest rates in situation looks vastly more benign than it looked 5 months back. Markets are flat. A lot of macro factors are shaping up quite nicely. This is a reasonable time to start putting at least 10-15% of your funds into the market, because I do hold on to my view that this year is going to be a very big year for India, and notwithstanding whatever the government does on all those kind of stupid policy fronts. But you just have to pierce through the current haze that you're seeing across global macro. Focus that the fact that India's macro situation has been vastly aided by all these factors. And as Adrian mentioned, soft commodity prices are also breaking down. All of that, is simply unmitigated good news for India. So I'd be putting money to work from here on, definitely.
We were just reading our flashes about how Reliance is at a 52-week low. Some of these marquee large cap names have really gotten beaten down in this market environment. BHEL, you have a Punjab National Bank. Of course, the PSU banks have problems of their own, but where would you really start buying in this market? What would be the initial trigger, and what would you buy?
Well, we've been bullish on the Indian oil marketing companies for the last couple of months, based on our view that oil would come off. So BPCL looks like a good candidate for a big move up. Strangely enough, it was very resilient even when oil was rising. And that was itself a big factor to a tape watcher like me. It wasn't falling even as oil was rising. And now that oil is higher falling, it's like rallying quite strongly. So we like that space. We've liked auto for a while. Don't see any reason, and particularly in light of two very important facts, that oil price is down, which means that incremental sort of price hike to the government may not be that soon coming. And second, and even more importantly, lower metal prices will mean reasonable cushion on margins front, because they have been really pressured in the last 2 years on their operating margin front, especially the raw material part of it. So I think that itself is also a very big factor. If you have overall lower interest rates, that will at the margin aid purchases of automobiles. So overall, lower oil prices, more benign interest. I think all of that points to a very strong auto market, relatively speaking, this year for India. So we like that. We like PSU banks despite the current sell-off. Again, softer interest rates means reasonable gains on the bond side. NPL problem may not be as bad as what people have been expecting. And in any case, remember, they're all asset backed, so it's not like a permanent hit on their portfolios.
Sure.
We broadly like what we have liked since the beginning of the year. We've been very negative on all the metal producers. We've been very negative on Reliance, very negative on Bharti. See no reason to change our view there.
You're saying this is a good opportunity to buy because the market is close to turning around.
Yeah, relatively speaking, I've been more optimistic on India after a long time relative to the big pack, relative to most other markets, to be honest with you. So, I think this is a good time to get some of your powder that hopefully you have left dry, put to work.